Welcome to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax-efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408-912-5038. That's 408-912-5038. And here is your host of Dollars and Cents, Sanjiv Gupta, CPA.
Good evening, friends. This is your own CPA, Sanjiv Gupta, CPA. Welcome to today's Dollar and Cents show, wherein today we are going to talk about the lot of things relating to the tax filing time, which is last day is on Monday, May 17th. As everyone knows, the date has been extended from April 15 to May 17. So this is a date we have to keep in our mind when we are looking at filing our taxes. So we're going to touch some few tricks and some things to take care of while we do our filing for 2020 tax returns. So we're going to touch on in the topic of the show. Today, in our tax update, we see that the stock market closed down sharply lower, because of there were some inflation issues that came up. The inflation for the year climbed 4.2%, the highest rate in about 13 years. So it created a speculation that Federal Reserve may dial back its easy money policies earlier than expected. Might be interest rate might climb up. We don't know. We're just guessing. With $4 trillion pumped into this economy since the start of the pandemic, and expected another $4 trillion, which is the President Biden's famous plans of infrastructure plan and families plan, going to come out, you think about $8 trillion in a year or two in this pandemic. That shows a lot of liquidity in the market, stock market or Main Street, or you name it, real estate. All have been climbing high and high. You go and start looking at buying houses, but you're not able to buy those houses because there's already so many offers on the table. It's too much money chasing too slow, too less goods or real estate transactions. That's what's happening. But inflation in a way is good. It's not bad. Whenever this kind of things happens, people start fearing for the worst. When things does not happen, they feel the worst again. So it's about the feeling. And God knows what will happen in the future. We are just playing guessing game. But of course, we have to keep our things in order to take care of any event that might be averse to your financial situation. Elon Musk today, the Tesla the president, CEO, Elon Musk, which everybody follows so much. I don't know why, but everybody follows him. Today he announced that Tesla will stop accepting Bitcoin for car purchases. Earlier he was saying it. Now he's saying that he doesn't want it. I don't know why. Even though the company continues to hold the digital coin on its books, that's something strange, and you can expect this kind of things from him. But anyway, so that's what he says. And we saw cryptocurrencies, Bitcoins going down, Dogecoin, which I don't know why people go into it and all this kind of speculative transactions. I think there's a lot of money in their pocket. So that's also took a beating today. I have a webinar that is coming on July 17th. It's about media tax planning. For registration for this webinar is through my website, sanjivcpa.com, SANGIVCPA.com. You can register there. It's an important webinar. Media tax planning will be critical. We have been talking about planning, and this year will be the major year for planning, whether it is long-term capital gains, short-term capital gains, real estate transactions, businesses, setting up the businesses, W-2 wages, bonuses, all kinds of transactions, because you can expect the tax rate to increase coming next year. Maybe this year, we don't know. So this is a very important topic to be discussed on the webinar. So hopefully you can register. We already have a lot of interest in this webinar, and it will, as we going to July 17th, there will be a lot of registrations on this. My firm, Sanjiv Gupta CPA, has offices in Fremont, Sunnyvale, Pleasanton. We have a team of experienced CPAs, CAs, EAs, and accounting professionals who are helping a lot of our clients in filing the tax returns, individual taxes and corporate taxes and LLC taxes, S corporation taxes, you name it, all the tax returns, we are filing it with all types of complexities. We don't deal with simple tax returns, we deal with complexities. That's what the motto of our tax firm is. We make it so simple for our clients that they like our services. They come and you can see our reviews on Yelp, on Google, and see what is going on with our services. I kudo all my team members. They have been putting long hours in this tax season. All three offices staff are working diligently and to the satisfaction of the client. They're working day and night, and really appreciate all the efforts put in by my staff. If you have any tax question, this is your time to call the studio line. Studio lines are open. 408-912-5038. 408-912-5038. This is our studio number. Tax season, we are coming to very close few days of the tax season 2020, which is happening on Monday, which I kept saying. So if you have any of those tax burning questions in your mind and want answers, whether it's stimulus payment, whether it's like unemployment compensation, whether it's paid family leave requirements, whether it's premium tax credit, whether it's foreign income reporting, whether it's Roth IRA, traditional IRA, whether it's foreign income reporting, whether it is long-term capital gains, whether it's child tax credit, whether it's S corporation questions, anything and everything relating to taxes. If you have that question and looking for a CPA to answer that question, is your time to call the studio line, which is the studio line number, which is 408-912-5038. 408-912-5038. Now let's start the tax topic of the show, which is about the tax season, which is about to come to an end on Monday. So last week's show, I covered a lot of topics relating to filing status. I talked about addresses, so important this time on your tax returns, dependents, how to take care of those dependents, and how this dependent definition will impact people claiming unemployment, claiming the EIPs, stimulus checks, separate filings, student loan deduction. We talked about that. And also we talked about W-2s, multiple state, home state versus working state, which is an important area during the pandemic. And we talked about that last time. Today, I'm going to talk about retirement contribution distribution, which is known as COVID-19 distributions. A lot of people have taken money out from retirement because the CARES Act provided that stimulus to take money out up to $100,000 from the 401k, IRA, any other retirement plans. Of course, you cannot take from DB plans, but you can take money out up to that for COVID-related distribution. When we say COVID-related distribution, that means anything and everything relating to taking care of COVID issues at their home, whether it's taking care of somebody sick at home, or yourself or spouse subject to COVID, or taking care of your kid, which are not going to school or daycare, or their daycares are closed. So you can take a distribution, and up to $100,000 people have taken it, and they have seen the 1099-R coming to them. Now, the 1099-R do so as a taxable amount equal to amount they've taken out, but you can spread that amount over 3 years by using a special form. You have to be careful when you do these calculations on those forms. You can spread the income over 3 years and pay tax over 3 years. And if you decide to put the money back in any one of those 3 years, you can recover the taxes that you have been paying, that you paid on those distributions. So it's important to remember those important things and keep that form as closely as possible, because you don't know what's going to happen next 3 years. So you can spread that income, pay the tax in 3 years, or you can, if you're not made much money last year, one reason or the other, and you've taken out a distribution, you can do in 1 year. You can do 1 year. You don't have to spread it over 3 years if you think your tax rates are beneficial for you this year. Remember, tax rates are going to go up. They are not going to go down in the next 2 years. So if that is the scenario, it's better to pay taxes today as compared to taxes in next 2 years on that distribution. You have to take that into consideration. In the meantime, if you any of the listeners have a tax question, it's a good time to connect with the CPA on air, Sanjiv Gupta. And it's a time to call the studio line, which is 408-912-5038. 912-5038. 408-912-5038. Whether it's a question relating to stocks, capital gains, war shields. War shields is an important topic discussion. We have been talking about that for a long time. Whether it's about S corporation, C corporation, whether it's about economic stimulus payments, Roth IRA, 401k plans, call the studio line, which is 408-912-5038. Now let's talk about important area of what can I do to reduce my taxes that people do ask, and that question always comes up. And when they do the taxes, they don't look into what planning they can do still for 2020 to avoid paying taxes. One, they can put money into traditional IRA. The rules which are there, if your income levels is below certain limits, married filing joint less than 124,000, and you have a 401k plan, you can still put $6,000 into traditional IRA, married filing joint. If nobody has a retirement plan, you can put up to 196,000 AGI limitation. You can put 6,000 each. And if you have one of you has a retirement plan, and the spouse does not have a retirement plan or no earning or no income, the working spouse can do a spousal IRA, $6,000. So don't forget that contribution. You can still do it till May 17th. What about HSA? You can, if your employer is providing HSA plans and you're not fully contributed, remember that HSA contribution this year is up to $7,100 for family plan. So if you contributed less, you contributed, let's say you just contributed $4,000, you can put the extra $3,100 into that plan to get the full deduction. And you know how the HSA money can be used. It can be used for medical purposes. And they have lowered the penalties and other things if you use it for medical purpose. And COVID is a good reason why I do all those plans. So look into the HSA plans. One important area of contribution to the plans is a non-deductible IRA. Let me take this call. I have a caller here. Let me take this call. Good evening. This is Sanjiv Gupta, CPA.
Hi, Sanjiv sir. This is Pankaj calling from
Hi, Pankaj.
Bay Area. How are you?
I'm fine, Pankaj. Yeah, tell me a question, please.
So I have a question related with the stimulus payment, the third economic impact payment. So I received, actually we are 3 people at home and we received only for 2. I'm not sure which one they gave it to, whether it's for myself and wife or whether it's myself or the kids. So what to do with the third person or the one who for whom we did not get the payment?
So you have 2 options. Number 1 option is you can call the IRS, but calling the IRS at this time is like waiting for hours and hours. It's better you call them at the end of May to find out whom they are paid. They will give you all the details, or you can go online and check it out. The second option is don't have to worry, because this third stimulus payment of $1,400 per person can be claimed on 2021 tax return, which you do on 2022. So even if you don't get it, you will get a credit for the unpaid stimulus payment for the fourth person. So you don't have to worry on that. You will not lose it. Okay. If you want now, you can call the IRS. If you can wait, if you don't get hold of it, don't worry. You can file. You can get on the return when you file the return for this year, next year. Okay.
Okay, got it. Thank you so much. I appreciate. And I had the other question related with the current year tax filing, which we filed it, but we got the tax refund from the state, but not from the federal. Is that something it is taking longer than expected this year?
That's a very good question, and it's good that you brought this to the attention of all the listeners. From April 10th till April 30th, if you filed any return during this period, the IRS system was off. They did not took the money out from the bank accounts, or did not issue a refund. There's something wrong in the system. So they did issue a notice to all of us, saying that if you get any penalty for not taking money out, for those people for whom the tax is due, they will not levy any penalties. For people who are supposed to get refund, don't worry, they will get the refund. They have started giving the refund in the, I think, first week of May. So you will get, just wait for a week or so, you will get the refund. Okay.
Perfect. Thank you so much. Appreciate your time.
Thank you.
Thank you.
Really appreciate it. Thank you for the call. Any listeners, if you have any other questions, tax question, this is the time to call on the studio number 408-912-5038. 408-912-5038. So when we are talking about another strategy, don't forget this strategy, which is known as contributing to a non-deductible IRA, or we call it backdoor Roth IRA. A very critical and important strategy for everybody who's making tons of money or who's not making tons of money. If you are not able to contribute to an IRA because of your AGI limitation, you can still contribute $6,000, $7,000 every for this year for both spouses if you're married filing joint, and you will not get a tax deduction because its AGI limitation is crossing. You cannot take it, but you will still will be able to convert to Roth IRA backdoor. So when you contribute to a traditional IRA, make sure that traditional IRA does not have any pre-tax IRA money, or any other traditional IRA does not have pre-tax money, and then you put into the traditional IRA, you will not get a tax deduction, but you will convert to Roth IRA, is known as backdoor Roth, and you need to file a return, a form. Always keep in mind, anything and everything that you do, you need to inform the IRS what you're doing, because in the later part, when you take the money out, you should be able to take that money out tax-free. And the way to get it is to file those forms. So it's important to filing that form. If you omit to file that form, the IRS doesn't know. And if it's time barred, if you take the money out later on, it will be taxed and penalty will be levied. So filing the proper form is very important. Doing the proper return is very important. It's more critical. Having a right person to do your taxes is even more critical when you have a lot of things going on. So do take your time. This is your tax return. And remember, this is a COVID situation. President Biden has promised this year to give $80 billion to IRS for oversight and other things. And Democrats believe in proper control of the tax returns. You will see more audits coming in. Maybe not this year, maybe next year. We have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA. How are you?
Good. How are you, Sanjeev?
I'm fine. Thank you for the call. Can I take your question, please?
Yes. So this is a little bit of a startup-related question. I know you guys are discussing about the May 17th deadline. So just wanted to know, I'm planning to, just wanted to know firstly, is this the right timing to ask this question related to startup-related taxes? That's okay.
Yeah, I'm okay. Go ahead with the question, please.
Yeah. So since I'm from Bay Area and I'm a citizen, in order to get the best benefit, I know I'm also a resident in Delaware. I have a family in Delaware. My first question is can we do a startup based on the Delaware registration? Is that legal? Is my first question.
So legal, we will keep it separate because I'm not the right person to talk about legal aspect, but I can always talk about the tax aspect, which is you can form an entity in Delaware. There's nothing wrong in forming an entity in Delaware. Delaware is a good state to form startup companies because of privacy and confidentiality and a lot of benefits given to startup companies. So that's why a lot of companies do form in Delaware. So definitely you can form an entity in Delaware. But if you're a resident of a particular state, for example, if you're a resident of California, you have to do a foreign qualification in the state of California, but you can still do a Delaware state, definitely.
Got it. Okay. But one of the primary requirement of the tax requirement is you need to have a residence address in Delaware. Only then you'll be eligible, right? I just wanted to know that.
Yes, you need to have a virtual office. You can have a virtual office, or when you do registration, or you can have
Okay.
the agent, the person who's like whom you're forming the company with. You can put they do provide the services of being a registered agent, and you can use their
Right.
addresses on that one.
Okay. And my second question is like, let's say I started my company this June is my first day, and until next year of June, and if I don't have any clients and if I don't have any employees running under my company, will I still be able to have to pay taxes because I've started my company and registered for it, or I'm
Yes,
okay? Go ahead.
yes. So definitely let me answer that question. Once you form a company, whether you have income, whether you have expenses, is not is not required, but filing a return is required. It's mandatory. So even if you have to file zero return, you still have to file it because that's a mandatory requirement. If you don't file it, there's a penalty and interest for not filing the return or not filing the
Right.
extension. So that is important. So if you have expenses, you can claim them on the return. If you don't have expenses, you can still have to file a zero return.
Got it. So if I file the return, do I need to pay anything like any what's like the rough
So if you,
percentage if
yeah,
I don't have any
I'm
profit?
Yeah,
Say.
so I'm just going to a very few minutes left just to summarize
Okay.
this. So when you file the return for Delaware, you have to do the
Right.
minimum Delaware franchise fee of $250. You have to do it online. The last day is March 1st. You can do it online. And if you when you file the return and if you're a California resident, you have to pay $800, not in the first year exempt. Next year you have to pay that minimum franchise fees of $800, whether you do business or not do business. Okay?
Okay. So will it also have an impact on the spouse as well if I start the company on my name? Like when we file jointly,
No,
like
no,
is it going to
no,
be impact? Is
no.
the spouse
If
also
you do
going to
it,
be impacted?
if you do it, if you do a C corporation, regular corporation, a C corporation, it has no impact
LLC?
on.
This is the one with LLC.
Oh, LLC will have an impact because it flows to the personal. Better if you are looking to do a startup, you can do LLC and then you can do convert. Initially, yes, you can do LLC and then convert to C corporation. Okay?
If we do a C corporation, then there'll be no impact on the spouse.
No, absolutely. C corporation is separately distinct from the owners and shareholders of the company, not LLC.
But what if I can do from the beginning, the C corp? Is it going to be more expensive for me?
Yes, C corporation does not allow the expenses as a losses to be claimed on your personal return, which you want to take it from on the LLC because it goes on a K1, flows to your personal, and you take the benefit of it. So I will suggest to do LLC for a few years and then convert to LC corporation. Okay, I have a few minutes left over. Let me
Okay.
do it. But thank you for the
Thank you.
call. Really appreciate it. Thank you. So now let's get back to our topic because we have like 1 or 2 minutes left for the show. So when you're doing tax return for last year, Monday is the last day. When you take care of those topics which I just talked about, if you receive a K1 from S Corp LLC, make sure the basis is properly reported, the losses, uh, and all, watch out for California. You have to look at the California screen. And which important form is that? CACA, California Adjustment Screen. Look at that form and make sure all the adjustments are done properly. If you're a business owner and if you're a PPP loan, remember you have to put that amount as a liability. You have to show that as a liability on the balance sheet. If you don't show that liability on a balance sheet, you will not be able to increase your basis next year when the loan is forgiven. So look at that one. And California has now come out with a lot of things with PPP loan. We're going to cover that in the next show next Wednesday at 6:30. Uh, and with that, I just want to close this show with the understanding that everybody is taking care of their health. We're doing the vaccination and taking care of their ones in India. India is very pathetic situation. Everyone knows. God help all our people back home. We can do whatever help we can do. With that, thank you everyone for listening to my show. I will connect with you next Wednesday, same time, 6:30 p.m. Thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv Gupta, CPA by calling 510-825-7